Hey, everybody, we're going to talk about some of my favorite opportunities in the stock market. Before we do, please click subscribe to my channel and take a minute to check out a message from our sponsor, The Motley Fool, where you can get the top 10 stocks to buy right now. So, there are a lot of bargains in the stock market right now for long term investors. And one area that has understandably been beaten down recently is home builders. We've seen home builders really just kind of get, they're losing on a couple different sides. Not only is consumer demand dropping, but because of higher home prices, we're also seeing mortgage rates go through the roof, and it's prompting a lot of customers to cancel their orders. KB Home is one of the leading builders and saw a cancellation rate of 68% in the fourth quarter. 68% of its contracts were canceled. Typically, home builders see cancellation rates in the 10 to 15% ballpark. So, with that said, this could be a long-term opportunity. There's a housing shortage of about 6,000 homes in the United States, with a lot of that at the lower end of the market, meaning that we need entry-level houses. People want to be homeowners, can't really afford to be. So home builders have an opportunity to really be part of the solution over the next decade or so as the market normalizes. One in particular that I put in my portfolio is a company called Dream Finders Homes. DFH is the ticker. They are relatively new to the public markets. They were founded in the Jacksonville area around the time of the financial crisis. And they've really grown impressively, both organically and through acquisitions. But their acquisitions have given them a pretty big presence in some of the most attractive markets in the United States. It has a big presence in Jacksonville, its home market, or Orlando, Charlotte, Raleigh, the big Texas markets, Dallas, Houston, and Austin, Denver, Colorado. These big high demand Sunbelt markets, where 3/4 of the net migration in this country is taking place in the states where Dreamfinders operates. The company has a specialization in entry level and what they call first move up homes. That has been its Achilles heel lately. Those aren't the most profitable homes to build. That's where we're seeing buyers really get priced out of the market the most. And it's just not really been a big catalyst for them lately. But it could be a big benefit as the market starts to normalize, hopefully as interest rates start to come down and home prices stabilize. There's a big opportunity here. Dreamfinders has a real nice history of having high margins. They use a land-light business model, similar to what NVR Homes uses, where they don't actually buy land until they're ready to build a house. They have purchase option contracts on houses that are easy to walk away from in tough times and kind of give them a lot more flexibility. I know they have their negatives as well. Very cheap stock right now, trades for about 7.5 times forward earnings. Very profitable business. It's a riskier home builder than most. I mentioned the focus on entry-level homes. That could be a negative in the near term. It also has a relatively higher debt level than peers. Nothing to be alarmed about, but definitely more debt on its balance sheet than peers. I mentioned it grew a lot through acquisitions. That's where a lot of it came from. But I really like this one. Tyler, any home builders in mind that you're thinking of?
I have a couple, but this is a sector that interests me a lot. It's one that I've thought about for a long time, and so it's like some of the things you mentioned, the shortage of homes. I think you said 6,000. It's 6 million. Just so I wanted to highlight that because the shortage is real. It's just not a village. The thing that is so hard for me to get a feel for what's going on in the housing market is because we've just had this weird whipsaw in the whole market, right? We went from, pandemic, shut it down, post-pandemic, everybody buy a home. It's 18 months later, nobody wants to buy a home because mortgage rates are above 5%. It's wild. And to be able, I can't imagine being a management team of a home builder right now. I feel like I just went 3 rounds with Mike Tyson in '86. This is so hard to manage, because inventory management is a huge thing in this business. You need to, you basically have to plan what you're doing 18 months to 2 years in advance. And with this weird whipsaw of a market, everything has been so reactionary that it's hard to get a good sense of who's going to come out of this, because we went from we got to build inventory. And now all of a sudden sales are killing and they're like, oh, now we need to draw down inventory. And so it's a weird time. And because of that, I just want to watch, but two companies I've really liked and I really want to keep watching are LGI Homes and Green Brick Partners. LGI Homes, same thing as Dreamfinders, entry level focus, and it's been one of the faster growing companies in this space, and has been very good at delivering value in that low entry point sort of model, versus they don't do a lot of customization like a lot of the other home builders do. So it's very cookie cutter, try to keep costs down. They have one of the better, some of the better margins in the business, despite being in the entry level business. And it has worked out so well for them so far. I'm a little hesitant because I think they've gotten hit worse than arguably any other home builder because of this whipsaw effect. They tried to build inventory extremely fast, and now they're like, oh no, we need to draw down on this. So that's one I want to watch. Again, I own it. I don't want to sell it, but I don't want to buy it right now. I want to see what happens over the next 6 months. Same thing, Green Brick Partners, great Sunbelt exposure. They are extremely good at underwriting their business. Like Matt said with Dreamfinders, they option everything. Well, Greenbrook owns a lot of it, but one of the things that management really hangs its hat on is underwriting what they're doing. Regardless of you own it or you option it, if you underwrite it right, it creates value. And that's where Greenbrook really shines. And one thing that management was hesitant to do during the pandemic is like, we're not going to build inventory as fast. We're doing really well. Let's buy back some stock. Let's reward shareholders. Let's not go too wild. It's worked out for them. They've kept a much cleaner balance sheet than most others. And so it's more intriguing to me, but at the same time, we're in such a weird time with housing that I don't know if I'm ready to buy anything. I just want to sit on the sidelines and watch these ones really well.
Yeah, I think we could both agree that it's definitely a weird time in the housing market. And if that's not your cup of tea, there's no harm in staying on the sidelines for a bit and letting things play out. We could both agree that there are huge opportunities in home building over the next decade or so, but it's a question of what happens in the next year or so.
I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 3 times. Go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 391% as of February 22nd, 2023, and are measured against the S&P's returns of 116% as of February 22nd, 2023.